Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Monday, July 10th, 2023. There's not too much to be adding to current analysis, so I'm just going to update the picture. And basically what I've left it on is our preferred count, which continues to suggest that we will begin to move with more strength to the upside as this as the minor fifth wave via a minute third wave kicks into gear. So overall, I'm continuing to count that we still have upside to complete. I know that there's a lot of rambling and there's a lot of rumbling that the market's really probably going to turn and start to head lower, et cetera, et cetera. But we did see, again, some rotations taking place today, primarily in some of the Dow stocks, where it was pretty strong gains as banking stocks and a few other tech stocks actually caught fire today, and the market moved fairly strongly to the upside. Now, again, what we also saw then in tech, we saw Apple kind of start to come unglued, Amazon start to come unglued, Google, Microsoft, NVIDIA, and Tesla. So all of the big players from last week, which drove the rally, which pushed the rally back up towards, actually here in the S&P, to a week ago, to a slight new high. And that we caught on the 30th, the end of the quarter rally that we had into the second quarter rally. Since then, we've been playing out at what I'm now counting and continue to count as a minute wave 2. Now, that minute wave 2 may have finished at today's additional low, which would be, that was at 4411.25. And if that did indeed mark the completion of this minute 2, then we're looking for the third wave to really just take off and start going. It ended up doing that primarily for the better part of the day. About the 10 o'clock hour, we ran into that where it dropped pretty strongly right up until 12 noon, and which time they picked up the rally again. Now, that's not a bad deal. It could be one, a very small, 1, 2, and we're breaking into a third. But we did see some selling after the bell today and brought the market back down a couple of points. So in essence, if this is 1, 2, and then within the start of the third wave, 1, 2 to the upside, I would be expecting that we will start to rally immediately, pretty much from the Globex opening, where we start moving higher, and then that just continues. Ultimately, we would be looking for 44.98 to be broken, 45 to be broken, 45.13 as this thing winds its way upwards to complete that minor fifth wave. So again, what we do have, we have the outside for minor 5, the fibs as it relates to the comparison between minor 5 and minor 1, and we have 45.13. Then we have on the outside here, that is for the intermediate C wave. So again, these are all the upsides. Intermediate C wave right there coming up, that's the B, so we're in the C. That would be where C equals A, that's at 45.65. So those all have remained the same. There's no differences there. So we have minor 5.618, which actually for equality, we're up at 46.03. So people are going to begin to doubt that all of this is going to lead to something that could find the strength to get it up to there. But let's not forget that by the end of the week, we will be hearing from the banks. And they did start to move back into the banks today. Citicorp ending down slightly, but Goldman Sachs was up a lot more than that $1.30. JP Morgan also, but ended up in the green. So we were looking for those earnings plus the start of this whole next second quarter earnings reports. Now, again, the word or the talk on the street is that eventually we've got to see where all of the higher interest rates and the things that have been happening within the economy are going to begin to reflect towards earnings. We've yet to see that. In fact, the market was propelled higher on the basis of NVIDIA and other tech companies and artificial intelligence taking over as the new and desirable sector. Now, what does that mean for us? We still should allow for the upside. But again, as I've been discussing, we may have seen it all. So this all becomes very important, and the structure becomes very important to the near term plus the midterm picture. If we've already finished this up, then we're not going to get much higher tomorrow, or even off of Globex before this market starts to come down again. Now, I continue to also run at the same time the possibility that wave 4 is not done. And so we've got wave 4 that's still going to come out over here somewhere. And what we now have is wave A coming down, wave B going back up, and now we're in the C wave, which could be 1, 2, and then 1, 2, and we're going to start dropping down. Now, that being the case, if a major if that is the case, we would be looking for wave C to be equal to wave A right here, 43.72. We have additional support at the bottom of wave, what is now marked wave 4, but that's all in the hood, 43.68, 43.72. Those are the levels that we would expect this C wave to come, as this whole move, this fourth wave, would be a flat. So in other words, we're looking at wave 3, and then we have an A, B, C flat 4, even though it got a slight new high, not by much, only by a couple of bucks. And then we put the 4 over there, and we have an ABC flat, the 4, and then we begin to rally. There's also the possibility, we have worked it out, that if it's not 100%, then it might be 1.618, where wave C would be 1.618 times the length of wave A. And that's going to bring us down to 42.99 into that area. So that is still out there, but the market's got to make clear, and it will. Point is, it's like, this is just doing what it does. The market is just doing what the market does, and we need to have a little bit more patience and bear in mind that we have 2 very viable paths that the market can take right now. In fact, 3, actually. If it is going to be done, wave 2 is done, and we're going to start rising in a third, which remains the preferred account. But to tell you the truth, the alternate and the preferred, they have probably fairly equal probability of one or the other carrying the same probability of coming into play. If indeed the 4 is not over, we need to let loose that we could come back down to here in an A, B, C flat. If a wave C is going to go the full bore of 1.618 of wave A, then we're going to be looking at these levels. So we have basically a picture that if we're still in wave 4, we have a drop into here or possibly here. If wave 4 is complete, where I've marked it as complete, and this is 1, and we're finishing up wave 2, then the market should begin to rally. And that rally, I could just kind of give you a hint. We'd be looking for that up to there and then down to there, and then we've got our upside. We'd be looking again, we're 100%, where wave 3 is 100% of wave 1, 43.35. And then we have these up here, which is the more likely area that it's going to come to. And that's a 3 and a 4, and then we still got a 5, which again, now we're pressing against our upper levels. So those are still alive. Then I am not by any means saying that that's what is going to happen, but those are still alive. Those have not been removed from reality just yet. So, and again, I did have another one there. I know what we have down is here to put in that C wave. So here we have the C wave, 100% of 43.99. If it is indeed A, B, C, we may have completed it here. We may see additional downside, but it would need to come down and hold 43.99, which is why I probably put the completion there. This was a solid enough rally. And if it is, then what we're looking for is more of this type of a move, or to start coming up. All right. That's going to be it for the S&P. Let's go over and take a look. Oops. I mean, I'm really kind of getting crazy on my mouse. Let's go over and take a look at the NASDAQ. NASDAQ's doing the same thing. And all of those things that we've already discussed are what is remaining in play. I remember what I wanted to put back. So, same deal. The preferred refers to that this is wave one, wave two, likely, possibly complete. Now, here again, we threw this little bit extra plow down, put in a new low. But if I go over and I take out these one-time anomalies, very clean. A, B, C, 2, 1, 2. Are we going to go? That's what it needs. It did kind of show that it wanted to, but we got caught up in a little bit after hour coming down. So going back over to the candle, you can see we finished in the green, but we took back most of that after hour bar. Finished down about 17 from where it got to. No, actually about 20. Got up to that high, closed back down at 93. So same deal. If 2 is finished, then I'm looking for this just to start going and to just keep on going. If it's not done, we do have 618 at 15,047. I'd be looking for that to come down, back in, and finish this off. This is not real pretty. There's another scenario that indeed, if this is A, so 4 is yet to complete, this is A, this is B, and then what we get going on here is 1, 2, 1 of C, 2 of C, we're in 3 of C, we get a 1, ABC, 2 of 3, then we get a 3 of 3, a 4, and a 5, and we'd still be looking for this move to get us back down into these levels, down into here. And this would be ABC, and this is A, B, and we're looking for that C wave. And these are the fibs for that C wave coming down, 618, 15,047. That's logic. It sits, it looks good, but then we'd be looking at the 100% where wave C would be equal to wave A, and that's at 14,810. And then we could put a 4 into that, and you start to go yet again. So all these scenarios remain valid. So as far as trading went today, it had its moments. It had some decent moves. This was pre-market. We had a very decent slide and actually came in, and we caught some of it on our opening, where we ran up, we ran all the way back down, we ran all the way back up, we ran back down and then back down, and then rallied. So if you had the patience to trade, there were some decent moves. Now, this is all hourly. If we're coming down to a 15-minute chart and you're looking in between here, it produced a lot of chop. So half a dozen of one, 6 of the other, so to speak. And that's pretty much what we kind of ran into today. Now, for tomorrow, same deal. If indeed this is 1, 2, and we're going to go, it needs to go. It needs to go. If we finish 2, whether it's here or here, if we finish 2, it's got to go. If we're still in this A, B scenario, and it's 1, 2, and then it's 1, 2. Okay, so again, let's work at it again. 4 is not done. There's wave A of 4. There's wave B of 4. We have 1 of C, 2 of C, 1 of 3 of C, 2 of 3 of C, and we're going to drop. And then again, we'd be looking for these lower levels. 1.618 comes even further below. I don't want to see the market drop all the way down there in a 4th wave. And I'll tell you why. To bring it all the way down into here, it does. There's the previous 4th of 1 lesser degree. So that part fits. But it just pulls the market in a direction it doesn't need to go, but it may. And really put the head fake on everybody. Like, okay, that was the high. That's it. We're not going to go any further. And kaboom, da boom. and then something comes in, and the next thing you know, we start to rally. So let's leave it open. I hate to say never. I can't do it. It can. The fibs tell us that it can. And we know on an Elliott basis that if this 4 is not complete and we're going to come down into here, then we are looking as if what Elliott told us, that the fourth wave will usually find its terminus, its completion point within the fourth wave of 1 lesser degree. Where in minor, what's 1 lesser degree? Minute, and there it is. And that's right into that support, 1.618. Right there. Right there. So, still alive. And could produce some decent trading, I will say. Could produce some nice, decent trading. Markets opening higher, both. Which is not a bad sign that the wave 2 is complete. But got a lot of time in front of us. So those are the scenarios moving forward, folks. Let them play out. Play in the market. Again, as a day trader, you're open to accept and trade both directions. When you're kind of trying to determine one or the other and you're putting on a position to reflect a move that may come in a mid to a longer term, it's going to be very difficult to cover. Even on a short-term swing trade, the market was kind of range bound a little bit today, so it didn't do it quite as cleanly. That's where I'm going to finish it up for today. Our next update will be on Tuesday, July the 11th.